MFRS 8, which is the Malaysian Financial Reporting Standard on operating segments. First, the definition. MFRS 8 is a financial reporting standard that requires companies to disclose information about their operating segment. These segments are identified based on the internal reports that are reviewed by the company's Chief Operating Decision Maker or CODM. In simple terms, an operating segment is any part of the business that earns revenue, incurs expenses, and whose results are regularly reviewed by the management. Next, what does MFRS 8 require companies to disclose? There are three key areas. The first one, the types of products and services the company provides. The second one, the geographical areas where the company operates. The third one is major customers that significantly contribute to revenue. Now, the purpose of MFRS 8. The main goal is to give investors clearer insight into how the company performs. This is done by sharing the same information that management uses internally to run the business, so investors can understand performance from a management perspective. Moving on to the next slide, which is the scope of MFRS 8. This standard applies to publicly traded companies, companies that are currently issuing securities to the public, and companies that voluntarily provide segment information. So the objective of MFRS 8 is also very important. The standard helps users of financial statement to understand how each part of the company perform, evaluate the company's risks and returns more accurately, and finally make better decisions about the company as a whole. So overall, MFRS 8 ensures transparency by showing how different segments contribute to the company's performance.
Next, for question 2, I will explain briefly about Chief Operating Decision Maker. CODM or Chief of Decision Maker are actually a function and not necessarily a person. The function is to allocate resources to and assess the performance of the operating segments. CODM is likely to vary from entity to entity, which means it may be Chief Executive Officer, Chief Operating Officer, Senior Management Team, or Board of Directors. The title or titles of the person who identified as CODM is irrelevant as long as it is the person responsible for making strategic decisions about the entity's segment. For Apollo Food Holdings Berhad, Mr. Chia Jiaming, who are also the Managing Director, are appointed as their CODM. Meanwhile, for CIMB Group Holdings Berhad, they had determined the Group of Executive Committee as its CODM. They are consist of Novan Amiruddin, the Chief Executive Officer, Khairul Anwar Rifai, Director of Finance, Tony Darusman, Sales and Marketing, and Ros Aziah Muhammad Yusof, Chief Stage of Research and Development.
So for part B, question 3, I'll be explaining the business segments and geographical segments of CIMB Bank Berhad. From the chart, we can see that consumer banking generated the highest revenue at RM 9.2 billion, although its profit before tax is lower compared to wholesale banking. Wholesale banking shows a balanced and strong performance with both high revenue and the highest profit before tax among all segments. Commercial banking recorded moderate figures in both revenue and profit before tax, showing stable growth. Meanwhile, CIMB Digital Asset and Group Funding contributed the smallest portion but still shows positive earning with RM 2.66 billion revenue and RM 1.66 billion in profit before tax. Overall, CIMB's performance in 2024 shows solid growth across all business segments, with wholesale and consumer banking leading the growth. Segments is geographical segments, so this graph compare revenue and profit before tax by country for CIMB in 2024. So from the chart, Malaysia remains the largest contributor, generating the highest revenue at RM 11.8 billion and the highest profit before tax at RM 5.9 billion. This makes Malaysia the main driver of the group's overall performance. So Indonesia follows as the second largest market with over RM 5.2 billion in revenue and RM 2.5 billion in profit before tax, showing a stable earning despite a challenging environment. For Thailand, revenue reached RM 1.76 billion and profit before tax grew strongly to RM 454 million, mainly from higher provision write-backs. Singapore also shows strong growth with revenue increasing to RM 2.39 billion and profit before tax increasing to RM 1.37 billion. Lastly, other countries including Cambodia and the Philippines generated RM 1.1 billion in revenue and RM 108 million in profit before tax, reflecting rapid year-on-year expansion. So overall, CIMB's country performance shows solid momentum, with Malaysia leading and other Asian markets contributing strong growth.
I will explain how segmental reporting benefits both Apollo and CIMB.
On this slide, we are looking at one of the key benefits of segmental reporting, which is better decision making. Segmental reporting helps Apollo's management make better decisions by identifying which segments are performing well and which need improvement, allowing the company to allocate resources more effectively and plan stronger business strategies. Next, segmental reporting also provides better performance evaluation. Segmental reporting allows the IMB's management and stakeholders to assess the performance of each region separately, for example, Malaysia, Indonesia, and Thailand. This helps identify clearly which markets are performing well and generating profits, and which areas may require strategic changes or further support.
Now, moving on to Part B, Question 1, which relates to MFRS 134. MFRS 134 deals with interim financial reporting. Under Bursa Malaysia requirements, any entity that has publicly traded debt or equity must issue interim financial statements. So, this standard ensures that investors receive timely updates, not just annual reports. In terms of the reporting period, interim reports cover a period that is shorter than full financial year. Depending on the requirements, these interim reports can be issued half-yearly, quarterly, or even every 2 months. Finally, MFRS 134 also sets out the minimum content that must be included. It means it specifies the required disclosure and it provides the measurement and recognition rules that companies must follow with preparing interim financial statements. In summary, MFRS 134 ensures that interim reports are consistent, reliable, and prepared using proper accounting standards.
Regarding question 2, there are 2 significant events and transactions that affect Apollo's financial position and performance since the end of the last annual reporting period. The first one is the acquisition by Scoop Capital Sdn Bhd. In December 2023 and January 2024, Scoop Capital has purchased a controlling stake in Apollo's Food Holding Berhad, where it is initially at 51.31%, growing to 78.42% after mandatory general offer. The company's ownership structure has changed due to this transaction, and there has been speculation that Scoop Capital may combine its Baskin-Robbins business into Apollo, where it could heavily affect Apollo's asset base and business scope. Additionally, the public shareholding spread falls below the minimum threshold of 25%, which is at 21.58%. The second one is declaration of 100% dividend payout. Apollo Food Holdings Berhad had declared a second interim dividend of 20 cents per share payable on 23 July 2025 to achieve a 100% dividend payout ratio for financial year of 2025. This gives an impact on the financial position and performance, where it reduces retained earnings and cash reserve due to the distribution of all of its profits. However, this event shows a confidence in cash flow.
MFRS 134 prescribes that interim reports shall include interim financial statements for the period. For the first one, SOFP as of the end of the current interim period, and a comparative SOFP as of the end of the immediately preceding years. For the current period, the company reports its financial position as at 31st July 2025. For the comparative period, the financial position is compared against the previous quarter, which is 30 April 2025. Statement of profit and loss for the current interim period and cumulatively for the current financial year to date, with comparative statement of profit and loss for the comparable interim periods, which is current and year to date. First, we have the current interim period. This covers 3 months running from 1st May 2025 to 31st July 2025. Next, we look at the cumulative year-to-date figure. This covers 12 months from 1st August 2024 to 31st July 2024. For comparison, the comparative current interim covers the same 3 months period but from the prior year, that's 1st February 2025 to 30 April 2025. Then we have the comparative year-to-date period. This spans 1st May 2024 to 30 April 2024. We move to the statement of changes in equity, Company Apollo. Statement of changes in equity cumulatively for the current financial year to date, with a comparative statement for the comparable year to date of immediately preceding financial year. The current interim period covers 1st May 2025 to 31st July 2025. This shows the latest 3 months changes in equity. Next, we have the comparative interim period, which covers 1st May 2024 to 31st July 2024. This period provides last year's equity movements from the same 3 months time frame. By comparing the two periods, users can clearly see how Apollo's equity position has changed year on year. Statement of cash flow cumulatively for the current financial year to date, with a comparative statement for the comparable year-to-date period of immediately preceding financial year. Statement of cash flow of company Apollo also reports on the 3-month interim period. The current interim period runs from 1st May 2025 to 31st July 2025. Next, we have the comparative interim period covering 1st May 2024 to 31st July 2024. These comparative figures allow users to see how Apollo's cash flow this year compares with the same quarter last year.